Good morning, everyone.
Morning, good
Howdy,
morning.
howdy. Audio good, Henry? Can you hear me?
Yeah, you sound good. How's mine?
All good.
Or hang on, I'm gonna change my mic a sec. How's that?
All good. I can hear you. How's everyone doing?
That work? Can
Happy
you hear me?
Sunday. Yeah, I can hear you.
I lost the microphone. There we go. How's that?
Yeah, you're good. Good morning. Good morning. Today is December 31st, 2023.
Last call of the year.
Last call of the year, last day of the year. Here we are. We'll give it a couple minutes for people to hop in. I know we've been away from each other for a couple weeks, so I know people are slowly getting into their routines, as am I. But I am excited to get back in it. Henry, you got it on record, right?
Yes.
All right. I do know that I will. Will you make me co-host, please?
Yeah.
Thank you. And it is New Year's Eve, by the way, so we are expecting a very small crowd. You know, people are traveling, people are doing stuff.
Yeah, it might be a bit of a shorter call today, but
But
that's
we
all
at
right
least,
too. Gives the
yeah.
opportunity for y'all to ask any questions you got. We can dive a bit deeper into some topics if you like.
And really, you know, this call is mainly for obviously giving you guys an update. Obviously, of what's going on in the markets, where we see everything kind of playing out and wrapping up for the year. But really just kind of reflections. We're going to kind of just reset, reflect, you know, just because today is December 31st and tomorrow's January 1st, it doesn't mean you go right back into trading full speed ahead just because now it's a new year. It will take still a couple weeks for the market to kind of get back in its groove. You really don't see kind of the regular price action you're going to want to see until really kind of like the first or second week of February. So it still will take time to get that. But the new year is here, so it's time to start kind of dialing back in, kind of breaking off the rust from not necessarily trading or looking at charts. I was talking to Henry the other day. I asked him if he had been looking at any charts, and he had said no. And I have not been really looking at charts. I took one or two sessions in an afternoon a couple days ago and just sat down for like an hour and a half and just kind of reviewed where we were at and kind of started looking at some things. But other than that, I have not really been watching the markets. I have not been looking at the markets. I know ICT has dropped some new content recently. He's releasing, you know, some stuff that was for charter students at the time. You know, I don't necessarily advise if you're new and you're still just learning your first model and all that stuff. No really need to pay attention to it unless you want to just, if it's not going to affect you and you think that you'll gain value from it, 100% go watch it. But you know, it is a little bit more for just experienced traders who already have found models in their systems that are just wanting to learn a little bit more. I will have it be at your discretion on whether or not it's something that you want to go watch, but I haven't watched it yet. I'm going to go probably find some time to watch them this week. But other than that, Henry, should we just jump into it?
Yeah, we can just jump in.
Okay.
I think people will join as they come, and the recording will be out there too. So
Okay.
all good. Let's get into it. I see a couple comments. So yeah, Happy New Year. Excited for the new year. Thanks, Harish. Yeah, it's going to be a good year ahead. We're excited for what's to come. Happy New Year, Sarah. Happy New Year, Luis.
Alrighty. News this week, January 1 through January 5th. Obviously, Monday, New Year's Day. It is a bank holiday. Don't expect anything there. Tuesday, no news. Wednesday, you have an FOMC member speaking at 8:30, and then at 10 o'clock, you have manufacturing PMIs, JOLTS job openings, manufacturing pricing, and then at 2 p.m. in the PM session, you have FOMC meeting minutes. Thursday at 8:15, you have ADP non-farm employment change. At 8:30, you have unemployment claims. And then on Friday, you have obviously non-farm payroll, average hourly earnings, unemployment rate, ISM services PMI at 10, and then following the week at FOMC, FOMC member speaking at 1:30. So just looking at this as a whole, obviously NFP week. With NFP week and, talking about NFP protocol, right? Trying to find an opportunity in the market either Monday, Tuesday, or Wednesday, no later than Wednesday AM session. And when you think about that, you're like, okay, well, Monday's a bank holiday. There's no news on Tuesday. So really, the only time I would be wanting to potentially look for a trade. Now, granted, I'm not going into this week trading live. I'm not going to, I'm very particular on how I go back into kind of coming off of an off season and into the season of trading. I will not take a live trade this week. I might not even take a live trade next week, right? If I am going to take a trade, it will be on demo. And the only time I would look for a trade would be that Wednesday AM session, right? So I would look to try to play anything in between 8:30 and 11 a.m., 11:30, and then I'll leave the rest of the market to trade without me for the rest of the week, just because you might think that okay, well, we don't have Monday and we don't have Tuesday, so does that mean we can use Wednesday and Thursday? Well, I will leave that for you to find out. I think that it's a protocol is a protocol, and when there's things like this that come inside of it, which Monday being a bank holiday, no news on Tuesday, that's something that you should study. But I still think that you just, it's smart to follow the protocol, right? Wednesday AM session should be the last time you should trade. And if it's the only time that looks favorable, then that should just be the only time. And you should open it up to just that and only that. So that's something that I'll be kind of looking at. Not going to trade live. My whole ordeal going into the new year is I use January to try to get back up in my rhythm, both with reading price and managing trades. And I utilize that through demo and slowly make my way into live. That by hopefully the second week of February, I'm kind of back fully into where I want to be with regards to the amount of trades I'm taking, the amount of, managing it, all that, right? This isn't something that you can just turn on and turn off and turn on and turn off. And when you turn it off for weeks and you turn it off for a whole month, you can't just turn it right back on, right? You have to ease your way into it. Other than that, that's really about it for me with news. Let me make sure. Any questions here on news? Any questions? All good here. All righty. So let's get into the DXY. All right.
A couple of people joining. Morning, Kate. Good morning, Mauricio. Morning, Marjon. Happy New Year, y'all.
Okay. So if you were on the last couple calls, I had been looking for price to deliver lower. I had been bearish looking for sell side on dollar. Where were we looking at, right? What was an area that I had mentioned that we could potentially come and fill, right? This weekly BISI, right? We had talked about it multiple times on multiple different calls. And you can see that we did find our way through it, right? Overextended it a little bit, right? So I go to the next discount array below it, which would be the mean threshold of this order block, right? So I'm looking at the mean threshold of that order block in this weekly BISI. Where did we close this week, right? And I was talking to Henry about this earlier this week. I was curious to see where, sorry, I sneezed. Where did we close, right? Closure is key. If you're new and learning and you try to figure this out, right? Closure is so key. It's what leads into the decision of your next move or opinion based on what and where is closing. So when you look into this BISI right here, right? We delivered all the way through it, overstretched it, and then came back and closed above the consequent encroachment of this weekly BISI, right? And obviously clearly above this mean threshold. So I'm open to the idea that price could potentially start to come up higher a little bit and fill a couple of different areas, right? And where would those areas be? Well, you have a weekly BISI or SIBI right here, right? So I could see price potentially coming and filling something like this. Right, you have that right there. So price, if it wants to, it could come up into this area, depending on how bullish it wants to be off of this, right? Notice how much of a discount we are in now, right? We are in a discount relative to last year's range. And this is going to be previous year's low, right? That's weird to say, but it is, right? This is previous year's low. So that's where I think we are heading, right? I think that this is where the liquidity is that the algorithm wants to seek. Whether or not we want to pull up or stay heavy-handed, I think can be found on the daily. So I took time and kind of looked to see, because we had been so overextended, right, coming down here, I used 2 fulcrum points, right? I used this area right here as a fulcrum point projection to get all of these projections, right? You can see that we hit this -4 here last week. And then I also used, because now that we've hit the -4 here, I wanted to use another one. So I used this fulcrum point also, right? These last 2 moves higher before price really went lower, right? And taking out a form of liquidity, right? You can see we took out a form of liquidity. You can see we took out a form of liquidity, right? So using those areas as projections and getting the -1, I like to add the 1.5, 2, and then the 2, the 3, and the 4. So it's me looking to see now over time, compared to everything that's going on, where could we start to form a low? And these projection points help me because I don't know where the low is going to be, but I can look. I know where to potentially look. So these are my areas where I was looking at. Obviously, you can see this past week, we hit that -4. Notice how we hit the -4, but we did not take this low, right? We did not take this low. So now we have relative equal lows sitting here in the form of sell side liquidity. So I would still expect price in my main draw on liquidity going forward would still be right now 100.5, right? 100.5. Then after that gets taken, we could start to maybe look at this -3 and then potentially the previous year's low, right? And look at what is sitting right below the previous year's low. If you come all the way over here on the daily, right, we have a BISI that has not been filled yet. So if I'm looking at that, we have a discount array that has open sell side liquidity sitting right above it. So I'd really like us to, going into the new year, I think that that's our scope of where we want to go. Where do we want to retrace prior to that? Well, if you look, right, we have this previous week's low right here, and we had just pulled up into it to close the week, right? We came all the way back up and filled whatever immediate imbalance we had made going in there. So now the question going into this week is, right, do we use this BISI, this weekly BISI, right? This is a weekly BISI. It does not show as a BISI on the daily. That's okay. And I want to do we use it as inversion is my question, right? Do we actually hold this? So I'd be watching to see the first couple of days of the week, right? Do we use this and do we maintain closure inside of it, or do we break back above it? And I don't know why it came to me, but a good analogy with regards to inversion, right? When we talk about inversion of BISIs and SIBIs, this analogy came to me. I don't know if it'll be good or not, but imagine like an area, so a BISI or SIBI, right? So you have a BISI or SIBI, right? Imagine the candlesticks being lava, right? We all know what lava is. And when lava's hot, it cuts through things, right? And then when it gets cold, it moldens and it becomes hard. So imagine when candles cut through, right? Think of it as lava. Lava's cutting through an area, right? Imagine that this BISI then becomes like hardened, right? And it can't go through anymore, right? It's the idea that it can't go higher through it, right? That's that level of inversion, right? It's either going to be sensitive to it or it's going to cut it and use it as inversion. It's only that. It can only do that. And you will see instances where price will do this. It will not respect it until it's ready to go. Right? It does that too, right? It's not perfect. There's a gray area in the market that you have to utilize. But at one point or the other, that SIBI or BISI is going to get used in a sensitive manner in one specific direction. So my eyes go here first in this weekly BISI, right? Do we maintain it as inversion and go lower and use it as resistance? Or do we go a little bit higher, right? Now that I'm sitting here and I'm looking, we have a volume imbalance. We have a SIBI right here. And we have actually now created a range, right? We have a high in here. There's a high right here. Low. And if I can grab my equilibrium, right? The idea is that can we pull back up into a premium? If we wanted to, we could pull all the way up into here and then go lower, right? That could be something that could happen. Depending on the news and what goes on and how we even react here, if we, for whatever reason, don't respect this, that's perfectly fine. Where could I see price going? Well, we have a very imbalanced price action here. And in reality, yes, we have created a range here, but we have also created a range here. And so I would prefer, if price is going to come down and take these yearly lows, it's got to get more willing. It's got to engineer more buy-side liquidity. How do you engineer more buy-side liquidity? Well, you get more buyers, right? So if we're gaining more buyers, what's the best thing to get a buyer into the market if they don't know what they're doing? Push price higher, right? So if price is going to push higher, it's going to engineer more liquidity for a possible future downside move. So with that being said, we might not respect any of these levels, push all the way higher into a higher time frame, higher price swing premium, come into here, fill an area that's imbalanced and has a layering effect, right? There's a liquidity void. There's a weekly, right? This is a weekly SIBI. There's also a liquidity void, volume imbalance, excuse me. And you also have order blocks, right? You have an order block on a higher time frame. This is a weekly order block. And you have a bearish breaker in here, right? So if I can count that, that is the weekly SIBI, daily volume imbalance, weekly SIBI, daily volume imbalance, daily breaker, weekly order block, right? And a fair value gap in here, and a daily fair value gap in the form of a SIBI. 5 PD arrays all layered right here, right? So in reality, yes, I'm bearish, but I would prefer price to retrace up into an area and fill this, because if we fill this, we can get up here. That means that when we go lower, we have the opportunity to potentially go lower and lower and lower, right? If we don't want to get up here and we don't want to fill this and we maintain all of, this area, for instance, right? If we come down into here, or if we even just do something like this, right? We might take out this area, come down into this area, but then we might pop all the way back up. right? Because this area is imbalanced, right? What's imbalanced must be balanced. And that has to, happen at some point in time. And you would prefer, if I'm bearish, I would prefer that happen before the larger liquidity is taken, so I can trust that when that liquidity is taken, we could potentially stay in that same direction. But really, hopefully you guys have kind of at least been able to understand and see that, up here, we were looking at potentially seeing dollar go lower, even up here. And now, we've overextended and hit all of these targets, right? We talked about these relative equal lows. We talked about these lows. We've seen all this stuff get hit. Now it's just seeing, okay, where does price start to create these lows and how far do we want to retrace higher before taking the large liquidity pool being previous year's low, which would be starting tomorrow. Any questions on dollar before I give it over to Henry? All good there on dollar? Nothing too crazy. It's same thing. I haven't changed my mind on it. I still see lower prices coming into it. Yes, it would be very weird to think that the dollar will be worth less than the $100 bill will be worth technically, under $100 bills, but that's okay. That's fine. Doesn't mean the world's going to end. But it's something to think about. And I am thinking in the back of my mind too, I have it in the back of my mind. Yes, there's inefficiencies up here. I'm going to obviously keep with the idea that I'm going to maintain, or the dollar is going to maintain the same order flow. But this low does not have to get taken anytime soon either, right? It took a big form of sell-side liquidity here. So we can play in this area for a while if we need, right? This is an area where the market could, Michael calls it crouching, where it could just sit here and kind of bounce in and around each other and just accumulate both areas of the market and kind of get people impatient and then maybe take one more higher retracement and then go lower. So don't be in the idea that all this stuff could happen by the end of January, right? This is the DXY has been moving a lot actually recently. So, I'm not expecting price to continuously run to those levels. I could be wrong and that's fine. But really for the most part, just waiting and watching to see daily closure in and around PD arrays, right? But I can get closure that tells me a certain thing, right? If we close above this PD array, all right, I go to the next one. Odds are we go to the next one. If we respect this one, all right, well, then I'll start to look on lower time frames to see if we have some form of reversal potentially happening to go lower. But other than that, that's it for me. Nothing too crazy, just kind of getting back in the swing of things. Hold on. I do have a question. Yes. So when the dollar goes lower, indices go higher, right? So all those, if you guys have noticed, like futures are up, but with the expense of the dollar going lower. After it has gone to the -4 standard deviation projection, it usually reverses to -2.5 area. Yeah, so that's a good thing to study. It definitely is something that you can get a lot of value of, but it's not like super accurate, right? The rule of thumb for me is just when price hits that -4 standard deviation, I have to know that it is very overextended, right? You're very long. Michael likes to call it long on the tooth, right? And when you're that long on the tooth, you have to kind of start to expect a retracement. It's not guaranteed. And that's why I don't just keep adding the -5 and the -6. What I try to do is I just try to add a different fulcrum point and get a different perspective. But when you hit that -4, you want to start to expect price to trade in the opposite that it had been trading. And even if to test your theory, right, we just traded to the -4, right? So if we wanted to trade to the -2.5, if we would trade back up into the -2.5, it would be right into all of this 5 PD array or 5 premium arrays that I was talking about. So yes, right, that's something that's good for you to test, but it doesn't hit to the T. But yes, you know, you want to start to expect a retracement, and the idea is that you're retracing kind of into the range in which has already been created through all of these extensions being hit, right? Because when you hit these extensions, right, if when you're looking at these extensions, right, when you hit these extensions, the idea is that price will cut through some of them, but in reality, it's making ranges in and around it, right? And so when you hit this -4, it's the idea that price is just going to retrace into some sort of newly created range that has already been, or that has previously been made. Okay. Hi, Carson. Can you explain how you're anchoring the first fulcrum point? I'm not able to get the standard. Yes, I can, for sure. So this one, I'll redo it, right? So I have my magnet on, right? I'm taking from the high, because I use the negatives, right? Because I use the negatives, and it's all preference, but I'm going from this is the high. So the reason I'm using this one is because this is the last area, highest and last area on this whole price move higher, where you had price kind of just create this and go lower, right? That's what I'm looking for when I'm looking at fulcrum points, is this move right here, right? And I'm taking it from here to there, and I'm kind of extending it out. So I look for the highest ones, right, the furthest ones away of the entire range, just to see how overextended we are, because that -4 is crucial, right? Once that is. So I'm going to come from this high all the way down to that low right there. Hold on. Oh, maybe I used the one on a smaller time frame. Hold on. Could have sworn that was a fulcrum point I used. Give me 1 second. Maybe I went digging a little bit more, and let me see really quick. Hold on. Good question. Might have stumped me. I could have sworn that I had. Hold on. It might have been on a smaller time frame. No. Hello. Where did I take this from? Here, I'll find this while Henry talks over ES, and then I'll jump back into it, because now you got me stumped. I have no clue where I even found that, because it obviously wasn't lining up on the daily. Henry, you can start talking about ES, and I will find this for Kate.
Okay. Mauricio, did you have a question?
No, I don't.
Oh, okay.
What's going on, Mauricio? Did you have a good Christmas?
Yeah, everything good. How
Good.
about you guys?
Can't complain. Great.
Hey.
Okay. Indices. All right. So just like we've been talking about the past couple of weeks now, this candle is now closed for December on a monthly chart, which leaves us with a new monthly inefficiency below price. So what does that mean for us? That means that now we've purged buy-side liquidity above here and above here, and we've created a new monthly inefficiency, which means that if lower time frame PD arrays fail, so we look down to a weekly and a daily chart, and see what's inside this range up here. If that fails, then this monthly inefficiency can serve as the draw on liquidity. So while we've been seeing higher prices, I'm kind of at a neutral point right now because we have inefficiency below price and we have buy side liquidity that's already been taken. And so I go down to the lower time frames, or they're still your higher time frames, but they're lower time frame, higher time frames, your weekly and your daily chart, and then even down to your 4 hour from there, and see what's occurring within here. So if you're seeing weekly PD arrays failing, then this can serve as the draw on liquidity. And if you see them continue to support price and to see new displacement higher, then you can expect higher prices and for bullish order flow to continue. So from here, I drop down to a weekly chart. And we can see, what do we have that exists above this monthly BISI right here? Well, we have two BISIs on the weekly chart. Okay, here's the first one right here, between this candle's high and this candle's low. And then the next is a much smaller one between this candle's high and this candle's low, right there. And you can see that this weekly candle did purge the previous week's high, but did not close above it. And so it's not a 100% thing, but what I like to look at a lot with fair value gaps is when you see the candle that is so a fair value gap has three candles, right? Like 1, 2, 3. The middle candle is the one where we identify the fair value gap, but the third candle has to happen in order to create it. Because if this candle went and traded all the way down to this high, there'd be no fair value gap. So every fair value gap is a 3 candle structure like that. And when I look at the third candle, this isn't 100%, but it leans toward this way. If you look at, if you go and back test it, the third candle, if you get closure above the second candle's high, many times you don't see an immediate return into that fair value gap, just like you see here. But when you don't get closure above it, just like we saw right here, it's more likely to have a return into that fair value gap. So I'm looking at this weekly right here, this first one, as the first area that price could potentially retrace into. Then from there, drop down to a daily chart. And we can see here was that daily fair value gap down here. Price goes into there and then trades higher. Oh, thanks, Luis. Okay, trades down into the daily right here. We're including the volume imbalance when we draw that daily fair value gap, and then trading away from it. And if you look really close right here, a new daily fair value gap was formed. It's very small, and that's where price returned to on Friday. Right? So trading back into there, and left below was a weekly BISI. So now from here, I look and see the daily has traded down into a daily fair value gap. So this is the same thing we're looking at on the monthly chart, right? Either we can now displace away from this, or if we fail to see displacement, then we can return into the higher time frame inefficiency. So now here I look on the daily chart down to a 4 hour. So in the first few days of the week, you'll see on the daily chart, do we start to get displacement away, or do we trade into the higher time frame inefficiency? And then from here, you can go to a 4 hour chart, and you can see now we're getting displacement lower on the 4 hour chart. So we have a CIBI that was created right here. And so you can now see, does price trade back up into this area and then continue to work lower back down into here or down to here? Or does this get traded through? And if you get closure through that, then you can expect these highs up here to trade. If you don't get the closure through that, then you can likely expect this area to trade. And what you can even do is go deeper from there and go down to an hourly chart and see the same thing happening. Right here, we traded up into the CIBI right there. No displacement away from it yet, but you can see it's been responsive so far. And so now you see on the hourly chart, if you get new hourly displacement right here, So that's going to be your 3 candle structure, just like a fair value gap. So if you had something like this, right? And then you'd have a new gap in here. Then you can see price return up into there and then trade lower into the weekly right here. So overall, approaching this from a pretty neutral standpoint, but being aware of the inefficiencies below price. Right? On a weekly chart, this is the first PD array that we'd expect to trade into, but if you see closure below that, then you have to look to what's below, which is this volume balance, and then this inefficiency. If we get the closure below here, I would start to expect the retracement into this area because we have overlapping PD arrays there, being this busy on the weekly and this old high, which hasn't been revisited yet. So if you get closure through this first one, then you can expect price to trade to the volume balance, and I would expect it to trade down to 47.38.5. And then you wait and see, is the weekly responsive? Do you get new displacement away from this weekly busy? And if you don't see new displacement, then the likelihood is that you trade down to the monthly busy down here. So really just following the fair value gaps and the displacement through the time frames gives you a good idea of where price is likely to go. Because it's either moving away from a fair value gap or it's moving back to the highest time frame inefficiency. Any questions here on ES? Again, just to finalize, really at a neutral standpoint. So we're waiting to see, does price return into these inefficiencies and get new displacement higher? Or does it just continue moving higher? Or do you see the PD arrays begin to fail and then you can trade into the higher time frame inefficiencies down here and this weekly one as well first? Any questions here on ES, or I'll cover NASDAQ really quickly. We're in the start of a new year too, right? So we have to give price a little bit time to develop and see what's kind of occurring here. And as we get more information, the direction that price is likely to continue in or area it should reverse to will become more clear. Even when I look at the quarterly for ES, when I look at the quarterly for ES, what are the chances of expecting? I'm not sure what you're asking exactly. Are you talking about quarterly shifts? I'm not sure. Quarterly shifts. I think I have a quarterly shift. Let's see. I'm not these on. Yes, H. Yes. Okay. You put that. They move the layers thing. Object tree. Okay, it looks like I deleted them actually. So I don't have my quarterly shift objectives marked out. But regardless of that, I think there's still the opportunity for price to continue higher because we're expecting lower prices on dollar still. But you have to be aware of these inefficiencies now that buy side has been purged, right? Once the long-term objective has been purged, just like we've had right here, then you can expect either continuation through there or a retracement back into inefficiencies that have been formed. So while quarterly shifts and the objectives can be helpful if you're looking at trading over a long term, like if you're a swing trader trading over a weekly or monthly basis, when you're looking at intraday trading and day trading, the most important things that I look at are just going to be your liquidity and inefficiencies, because that's how the market's always moving, right? It's only doing one of two things. It's going to inefficiency or it's going to an area of liquidity. And so that's all that's really important to me when I'm looking at analyzing price. Where is the liquidity? What is left to be purged or what's already been purged? So here we had buy side, which was purged right here. And then where are the inefficiencies in price? So here we have the weekly, here we have the monthly below. And I always look at it from the highest time frame inefficiencies down to the lowest, because the highest is what is likely to serve as your draw. And that's how you identify areas of, that's how you identify price legs that are more likely to fail as well. Like if here, for example, if we have this weekly inefficiency below, mark this as weekly, and then go down to the daily. The way I look at this is while this can still work, this daily can move price higher. And it'd be a better example if this weekly wasn't here as well. But while this daily can move price higher, I would view this leg of price action as a lower probability price leg because there's a higher time frame inefficiency below the weekly. And so I'd be more likely to expect this area to fail. And that's why if I were to take a trade off of this, I would expect lower time frame displacement first before I'd have any interest in being a participant. So from here, I'd go down to a 4 hour or a 1 hour and need to see a new imbalance created on the buy side. Because otherwise, I could expect that this daily could fail and price can trade into the weekly here below, and then the weekly below that. Does that make sense? Always following it from the highest down to the lowest. Go to NASDAQ. NASDAQ, same idea, really. Yeah, sure thing. Monthly, here on the NASDAQ, just like we touched on ES, buy side's already been purged above this high, which was just slightly higher than this high here. Then we drop down to the weekly chart. Here's the monthly resting down below here. Here's your weekly chart price leg. And so it's the same idea that I just talked about, right? This would be seen as a lower probability leg on the weekly chart, given the fact that there's a monthly imbalance resting below. Okay, so you could see this area fail and price trade into here. That's not the immediate expectation, though. What we do is we wait for price to retrace into the weekly inefficiencies and see what happens. Do you get new displacement on a weekly chart, which means you trade down into here or down into this area here, and then create a new BISI away from it? If so, then you can expect higher prices. If you fail to see that displacement, then you can expect price to trade down toward the highest time frame inefficiency, which is your monthly down here.
Henry, when you say displacement, on what time frame should we look? On 4 hour, like a big 4 hour candle?
Would
that be the tip that we're going lower?
The time frame that I'm looking at, so here I'm looking at a weekly chart, I want to see the new displacement occurring on either that same time frame or the time frame below it. So from a weekly, I would go down to a daily chart. So here I would want to see
taking that low of the previous week, or taking the 2 weeks ago, the low of 2 weeks.
Correct. So first, I would, in order to continue following bullish order flow, what I'd want to see is for price to retrace down into a weekly fair value gap, and then to see either a new BISI created on the weekly or the daily chart.
Got it. Okay.
Good question.
That is a good question. Yeah. And that doesn't mean you can't take trades before that, right? You can still look at the responsiveness in these areas and potentially find a long trade off of that. Or you can use the inefficiencies as an area you expect price to trade back into, and you can find short opportunities within here for price to trade back into this area or into this area. But you want to be collecting data as price trades into those. You're noticing things like, how far does price trade into it? Does it trade to the quarter point of the inefficiency? Does it trade all the way to the midpoint, the consequent encroachment? Where is the candle actually closing? Is it closing at the consequent encroachment, or is it tapping it and then closing at the high end of the fair value? Is the candle closing below the consequent encroachment? All of these things are giving you data points as to what is more likely to happen next. And that's why we can make decisions in what we expect to see in the future. So you want to see, does price trade into these areas at all? And then what happens when price trades into them? Because that gives you an idea as to whether we might see new displacement away from it, or if we return to a higher time frame inefficiency. So we know we have to acknowledge the fact that we have this monthly BISI below. We're not immediately expecting price to return to it, but we have to know that it's there. Because when you know that it's there, when you start seeing if price is failing PD arrays, you already know where price is going to. It's not just failing these to fail them and then go higher. It's failing them because it has a higher time frame intention of returning to an inefficiency that exists below price right now, which is right here. So there's always a reason for where price is going somewhere, or for when price is going somewhere.
How percentage, how big of a pullback is that? Can you do it? Just
how big of a retracement?
Yeah, percentage wise.
From
That's like what, 5% more or less? Yeah, 6-7%.
6.5. Yeah.
Yeah, that's normal.
So not immediately expecting a return into this area, but be aware of it. Know that it exists here on your monthly chart, and then when you go down to a weekly chart, you can see what is between where price is right now and where this area is. And so you have this weekly BISI between this high and this low, and you have this weekly BISI right here between this high and this low. And so you look and see what happens in these areas. Does price return into them and get new displacement on a weekly or a daily chart? Or do you start to see closure through them, like through this BISI right here, and then through the consequent encroachment of this BISI? Then you could expect price to retrace further into this old high, and then potentially back down into the monthly inefficiency. If you see the new displacement away from them, then you just look to where buy-side liquidity is, which is going to be above this high. On the daily chart, same idea here with NASDAQ. We have the weekly that now exists below price right here. Here is a daily BISI that was returned into on Friday. Small one right there. Note that we got closure through it. Oops. So Friday's candle closed through it. If you drop down to a 4-hour chart, you can also see there's been new displacement on the 4-hour. And so I would expect most likely for price to trade into the weekly BISI right here. And what happens after that is we'd look on the daily chart and see if we get new displacement away from it, or if we fail to see that displacement, then we can expect price to trade into this weekly BISI. Any questions here?
I found I have your answer, Kate, by the way.
Pass it over to you if there's no other questions on ES or NASDAQ. Any last thoughts or questions here? Looks good. Okay. And if y'all want to come back to it, we can.
Alrighty. So Kate had
Okay.
asked earlier, she wasn't, and very good question. She wasn't sure where I was dragging that fulcrum point on dollar. because I was talking about this whole thing. And granted, yes, you can use this whole up and down thing, but I refined it. If you can see, I refined it from the candle that has the most body up into here, right? And so on a daily, it looks like basically you're using the order block up into the high. If you go into a 4 hour, I'm using this wick. I'm using this wick into this high because as you can see, we came down, came back higher, but then we had one more sharp down, right? So if you're looking at this, it's like instead of there's this, right? There's that, and that's what you can use, but there's also one more little area in here where it gives one more and then it goes. So I'm using this. I've refined it down a little bit more using only the most energetic price swing, right? The last most energetic price swing. And this was the last time we had some movement down and then it's just straight higher, right? There's no price action going lower at all within this move. So it was refined a little bit. So when you look at that on the daily, it looks like basically using it from this candle body low, if you use it from this candle body low into the high and not use this wick at all, you're getting the most recent refined energetic move higher without any move going lower. So if you actually just use this candle body into here, that's where you'll get this area right here. Hopefully that answers your question.
Yeah, thanks.
Not a problem. Not a problem. Good question. Because you kind of stumped me for a little bit because I remember I had, and you can use this too, but when you're looking at using fulcrum points, right? If I'm wanting to use a fulcrum point, which in this case, we have a high, we have a low, we have a higher high, and we go lower, right? I'm wanting to use this as my fulcrum point and get my projections. But overall, right, if there's areas on smaller time frames where it's coming in and then going higher and then coming in, going higher, whatever, you want to use the area of price where there's no movement going lower, right? It's that last thrust higher. And so I had refined it a little bit on that 4 hour. And those are just little tiny tips and tricks that you kind of start to figure out over time. Is there anything wrong with just using this right here? No, right? It's not, there's nothing wrong with it. It's just going to give you a larger range, but I wanted to refine it to where if price was actually going to, be overextended when I had refined it and I had seen that it had actually hit that number 4 there, I liked that area better. And then obviously seeing how we closed still above it just kind of gave me that idea that I wanted to just kind of stick with that. And then, maybe you don't want to use 2 fulcrum points, right? Maybe you don't want to use this one. And so instead of just finding another one, you can widen that open. You can widen that up a little bit if you wanted to, and then just start to change, right? You can see that -3 is almost, this -3 almost got hit. It didn't quite get hit. But, you could open that up a little bit more too. So it's preference, right? Whether you want to open it up or you want to just go find another one. To me, I liked the way it looked on the 4 hour. So I'm going to keep this there, but then, use a more recent one, right? And you could do this, right? You could do that, but you can see that that's already got extended. So I got to widen it out a little bit. And that's how I got these. Any other questions there before we get into, yeah, I'm glad you got a good analysis too. So really, that's it for charts. There will not be a assignment this week with just the bank holiday and everything. It's the first week. We'll start giving you guys training exercises going into the next week. We are going to have everyone reset their accounts, right? So we're all resetting back down to 100, right? New year, fresh start, no matter where you are, in drawdown, in profit. We're all going to go back to 100 grand in those trading view demos and just fresh start it. There won't be one this week, but going into next week, we'll start having them. A couple things to look forward to into the year, at least from a perspective of firsthand, right? We want to start doing student spotlights, right? So we do watch you guys. We do have eyes on you guys. We love the activity. We love the questions, right? And we're going to start to format something where at least once a month, whether it's once a week or once a month or twice a month, whatever the case is, we're going to do student spotlights. The student that we feel as if that is the most curious, right? The most curious, the most hungry, and really is just working on themselves. That doesn't mean you don't have to just, we want to see results, right? We want to see the person who's curating the most data over time, right? We're going to do, we're going to cater to you, whether, we don't know what that's going to be, how we highlight you. We'd love, for you to obviously come on with us and share reflection, things that have helped you in your studies, things that haven't, distractions, good things, bad things, but then also, I know for sure one thing what we'll do is, that student will also get a free one-on-one with myself and or Henry, whoever fits your liking. You'll get a free one-on-one with myself or Henry, and that's something that I think is beneficial, and it benefits the community because we want to use your studies and the way you've learned and curated your development as a trader. We want to, obviously take that and share that, right? That spotlight will get posted in the community for people to see, right? The right thing to do, right? Students that are doing certain things and are getting the certain results that others want. We want to highlight that. So that's a big thing that I think we're going to try to implement going into the new year is student spotlights. We've got a couple other things working down the road, but I'm not going to get into it, right? We're constantly, the very first iPhone that was ever made is not the same iPhone that I have right today, right? And this isn't even the newest one, right? And as a community, we're going to go through constant iteration and improvement to try to get things better, right? To try to have the entire platform as a whole be as stable and as solid and as adaptable and versatile as we can, right? And that takes a lot of responsibility on myself and Henry, but then also on you guys as well, right? Even the ones on this call, but even the ones watching it, right? There's going to be a point in time where, we're going to rely on you guys, right? To help better and build the community. So keep that down the pipeline, right? We've only been doing firsthand since October 1st, right? It might feel like me and Henry have, been doing this the whole year, which we have, but with regards to a real, actual, community and platform, it's only been 3 months. We are definitely working on the backgrounds to see what we can better, how we can make it better, things we can change, things we can add. And so please be on the lookout for that. I'm super excited now to see because really all this is just the first iteration of firsthand, right? This is just the first iteration, volume 1, right? It's constantly going to get better and change. And, I can't wait. I took a screenshot the other day of just several pictures of just the forum, the platform, and all that stuff, because I'm so curious to see a year from now where it will be. So expect that. Expect giveaways going into this year. We want to have giveaways with the opportunity of you guys to get funded. So we'll probably throughout the year give away some funded accounts. That's something that I want to do going into this year also. So we'll find fun things to be able to have people have the opportunity to give giveaways. I do want to read something going into the new year, to give you guys a sense of motivation. I will be starting 75 Hard on January 8th. If you don't know what 75 Hard is, you can look it up. It's a mental and physical journey for 75 days. It's a strict routine that you have to kind of follow, and I'm going to give it a shot. It's not called 75 Easy. It's called 75 Hard. So I will be trying to participate in it starting January 8th, and then I will be going through March 23rd. So that'll be something fun. That will be something fun that is going to test myself, but it will build me, right? It's supposed to build me. It's supposed to break me, and then it's supposed to build me. So it allows me to get into the right areas in which I want to be, right? If there's one thing, and we're going to go around, and I think that something that we should do is, if you guys want, even whether it's in the chat or you come on and talk, right? What's some big reflections looking back on this year, right? Some great things, some bad things, right? And I can tell you one great thing that I can reflect on is this right here, right? I have the opportunity to sit here with all of these people, like-minded people, right? We built something, right? The fact that there was no firsthand, right, in the first half of the year, right? This got built throughout the entirety of the year, right? It took a lot of different calls, a lot of different questions, finding a lot of different answers to try to make it all work. And it's at least here, right? It's not the best it can be, but at the end of the day, it got built, right? And we have a ground level where we can work from. That's my biggest reflection. That's my biggest takeaway from this year. My biggest reflection in the form of like, what could I have done better? This was a year where I was a little bit complacent with my trading and even just my finances, right? I'm blessed that I'm able to sit here and have that be a thing. And it is very true. Once you start to make money, it's a lot easier to get complacent when, the person I was this year was not the person I was a couple of years ago when I didn't have a whole lot of money, or I had nothing, right? Your motivation's different then than it is now. So there were areas throughout the year where I was complacent with myself and trading, and I was more in the mindset of I wanted to build something. And so my mind went towards that, not towards results in trading. Were my results in trading great? No. Were they good? Yes, right? I didn't trade as much. I didn't have necessarily the year I wanted to trading, but I know that my focus was elsewhere. And a lot of that came from complacency of not feeling the need to trade and catering to that, right? If I didn't want to trade that week or I didn't see anything, that was fine, right? I didn't feel forced to take trades. Now, you should never feel forced to take trades, but when you know what you're doing and you have a model and you actually devote the time, morning in, morning out, morning in, morning out, you can do a lot with this. And so I think something going into the new year, that my focus is going to try to balance time correctly. This has already been built, so I just need firsthand's already been built. I need to focus on getting it better, looking at the data, comparing the results of what needs to change. But this year, I am going to be a little bit more focused on my trading, getting myself to that next level of trading per se, and not feeling that complacency. That's why I'm doing 75 hard. Because it's true, you have to beat yourself down to build yourself back stronger. And so this first part of the year, I'm really focused and oriented on, mentally and physically straining myself, right? I that's where I thrive the best, because coming out of it, I'll be so much stronger and so much more physically and mentally armored going into the new year. But I do want to read something to you guys, and I think that this is something that I think we'll take with you guys into the new year. Because I'm going to sit here and say that everybody on this call right now, and the ones that are watching, you're going to create a new life, right? You're supposed to create a new life. The odds that you're going to live the same life forever, I think, are very slim. I think everyone here and everyone on firsthand has the same like-minded, consistent goals of just the person that they want to be. Some bigger than others, but overall, we all want to get better, right? If you're going to get better, you are going to have a new life. You're going to need a new life. And guess what? It comes at a cost. And your new life is going to cost you your old one, right? Think about that. Your new life comes at a cost, and it comes at the cost of your old one. It's going to cost you your comfort zone and your sense of direction. Both of those go out the window, right? You're not going to be comfortable, and your sense of direction is going to be gone, right? You're going to get lost. That's okay, right? It's going to cost you relationships, and it's going to cost you friends. It's going to cost you being liked and understood. It doesn't matter. The people who are meant for you are going to meet you on the other side. You're going to build new comfort zones around things that actually move you forward. Instead of being liked, you're going to be loved. Instead of being understood, you're going to be seen. All you're going to lose is what was built for a person you no longer are. Remaining attached to your old life is the first and final act of self-sabotage, and releasing it is what we must prepare for Remaining attached to your old life is the first and final act of self-sabotage, and realizing it is what we must prepare for to truly be willing to see real change, right? So as you go into this next walk of life, into 2024, prepare for what's gonna cost you your new life, right? That's something that I've been thinking about a whole lot. It's gonna cost me friends, being liked, being understood, because guess what? The person I want to be is not the person that everyone that all my friends, everyone that likes me right now, all that good stuff, they like me for who I am right now. That's not who I want to be. So if I have to change that person that they like is no longer there, guess what? They probably won't like me. Well, Carson, why would you want to lose friends? Because I know that there's friends that on the other side. I know there's people on the other side that even though I have friends now that like me, there's people on the other side that'll love me. And yes, there's people right now that understand me, but then there's people on the other side that will see me, not just understand, but see me, hear me, feel me, right? Not just like me, understand me, right? So all that stuff, all this growth comes with a cost. And I was telling Henry, like, I will be damned if there's someone on this universe that works harder than me next year. We'll see. I challenge you, right? I challenge you. Just know, right? On those days where it's rainy or you're sick or it's cold or you don't feel good or you're going through something, right? When that alarm goes off, when that alarm clock goes off at whatever time, just know I probably got up a little. I was probably already up for an hour or so. I've probably already been up. I already got my day going, right? There's people that are doing it either way. It doesn't matter how they feel, right? They just do, right? So going into the next year on your journey, know that there's someone working harder, right? That's who I'm chasing, right? When I wake up, I already know if I wake up at whatever time I wake up, I already know someone probably beat me out there in the world. That's okay. It's the idea that my attitude towards each and every day, right? I truly firmly believe that the journey is the destination, right? The journey is the destination. So I don't have a destination. I'm going to fall in love with the journey and realize that in that journey is where I just stay. And I don't need to go anywhere else. If a mountain was smooth, you wouldn't be able to climb it, right? You need those jagged bumps. You need those rocks in your way so you can hold on to something and pull yourself to the next one, right? And quite frankly, it's a never-ending climb. But just grabbing onto one rock, pulling yourself higher onto the next one is a win in itself. And there you can find bliss. Take that how you want it. I am truly grateful for each and every one of you guys. It's been a super fun year. Henry, like, you know what it is. You know what it was. Like, you know what it's going to be. I love this stuff. There are some calls, looking back on the year, there's some calls where I might have gotten on here and I was tired or whatever. There might be calls where I had a whole bunch of energy. But this truly is my escape. When I sit down here on Sundays and I put these headphones on, whatever's happening in the world dies to me. This is my escape from reality, right? I have fun with this stuff and I enjoy watching you guys grow. I enjoy watching and seeing you guys go through all of the things that you go through, even the ones that hurt, right? I enjoy that because I know that that's what's supposed to happen, right? And on the other side, I enjoy even more watching you guys thrive, watching those aha moments, right? Watching those moments where you realize that makes sense. I can do this. Right. And so, I'll open the floor. Henry, you can kind of lead into it and just kind of talk about your reflections on the year. And we'd love to hear from anyone else on the call as well.
Yeah, I don't want to take a whole lot of time because I want to give more opportunity for everyone else to share some reflections. If you do, I'll post something in Firsthand Social as well. If you all want to go on and leave a comment, I'll do that after this call ends. But it's been a great year. It's been a lot of learning for myself, both in trading and in my outside life too. There's been a lot of change in my life. I mean, I moved states in the later half of this year, so finding new ways to get out of my comfort zone and continue to grow into the new year. My trading has definitely reached a new level, a lot of breakthroughs in this past year that I hadn't had in the year before. So I'm excited to see where things continue into next year. I have very big goals for continued growth and hopefully P&L as well. But we'll see how it goes into the new year. I'd love if y'all wanted to come on and just share. Maybe we do one thing technically that you learned in your trading this year, one major lesson, and then one thing in your outside life as well. So the first that I'd share is just technically speaking, the two greatest breakthroughs that I had in this year were just first keeping things extremely simple. Just like I talked about earlier when we were going over indices, the market's only doing one of two things. It's going to inefficiency or liquidity. So I had a breakthrough at some point in the year. It's probably a few months ago where I just cut back on a lot of the things that I was using in my trading and returned to the basis of what is happening in general, which is price moving to inefficiencies or liquidity. Well, if that's happening and when price moves, it creates new inefficiencies, then why don't I just focus all my attention on liquidity and inefficiencies? And doing that has made an extreme difference in the quality of the trades I take, the decisions to not take a trade when it's not high probability conditions, and my ability to stay in trades longer too. Because now I'm focusing on the most important things, liquidity and efficiencies, and with both of those being the draw on liquidity as well. And without understanding what the draw on liquidity is, then it's very difficult to trade. But if you put all your attention there, then you can really do well. Because just like Michael always says, if you don't have something you're aiming at, you're going to hit nothing every time. So you're going to have a draw on liquidity in your trading. So technically speaking, just keeping things simple and focusing on the baseline of how this all works has made such a difference. And I encourage you all too, if you're finding yourself clogged up in your charts trying to look at this PDRA and this and this and this, cut things back and focus on that one thing for you. Michael talks about this too. He taught all of these PDRAs and things so that you can have a better understanding of price and what's likely to happen and likely to occur next. But the best thing you can do for yourself, especially in your learning stages, is to focus your trading on a single PDRA. You can still understand what the other things are, volume imbalances, breakers, liquidity voids, inversion, whatever. But whatever PDRA stands out to you best, that single one PDRA, and for me, I've just made it fair value gaps. That's the one thing that you should be trading off of. It could be something else for you, but don't try to trade every single thing. Instead, focus your attention on one and get a really firm understanding of that. And that's going to help you with being more selective in your trades, taking higher quality trades, and really understanding what you're looking for in the markets. On a more personal basis, with everything that's happened this year, I've had a lot of motivation over the last year and going into this year to be stuck on my screens a lot and very dedicated to watching the markets and being involved in them. And I've had so much change and things happening in the past year that I've had to come to grips with not being able to do that all the time. And that is a different level of comfort with things that I've had to develop over this past year. And I think it's been really positive for me too, because having times when I haven't been able to trade and then not feeling any emotion around that and being able to detach myself from it and just enjoy other areas of my life or go through things that are challenging without feeling like I have to have a commitment to being in the charts has been very positive for me, because it's allowed me to um, it's helped me in the day-to-day of not feeling like I need to be involved when conditions aren't high probability. And so I'm very grateful for the changes and things that have happened in my life, because it's given me a better understanding of myself outside the markets, but it's also influenced my involvement in the markets and encouraged me to take a step back from things when I can. So anyway, those are my 2 points. I'm really excited for the new year, where First Hand goes and where my trading goes as well. If you all want to come on and share a couple of reflections from the year, I'd love to hear from you all. Just feel free to raise your hand, or I think you might just be able to open up the mic. Leslie, I see you. Go ahead.
Well, mine is short and sweet, but this year has been really. I've learned a lot this year. I was able to get funded with Top Step twice. First back in August, and I've seen my trading develop where I'm getting consistent. And the thing that I've noticed, I guess, for the last couple of months is that I know where I'm going, where stumbling in my trading is where I see a setup, my model, and I trade it, and it hits my target. And then my issue is one to get back in the market when I should just stop for the day. And um, so I've been trying to work on that. That's what I'm going to work on this year. And every time I get in and then I lose, I always hear Carson's voice on one of his posts that he posts. He said, "Just stop, just stop, just stop." and I, it's like, just don't get, just stop. And so I'm working on that. Just once I hit my target and my trade plays out, just close the computer. Like you say, if I have to give it away, until the end of the day, that's what I'm going to work on this year. And that's hopeful for me, because I'm like, wow, because I'm seeing consistency with the markets every day. I'm like, oh, okay, I see my setup. I trade the silver bullet. I put my trade on and it goes. And then I mess myself up. I get back in and end up giving back either half or all of my profits for that day. So now I know that if I can force myself to stop after each trade every day, then I would be really consistent and see my equity grow over time. So that is really positive for me, that I can actually see like the light at the end of the tunnel now. So as before, I'm like, man, what is going on? Now I know what's going on, because I'm actually seeing progress, and I also know where things are going wrong for me. So but I'm just really grateful for the community. You all have helped me out a whole lot. So I just want to say thank you, and I'm looking forward to 2024.
Thank you, Leslie.
Hell yeah.
Self-awareness is admirable. That's key, and that's going to take you really far. So I'm glad to see you've done some reflecting on that. I know you're going to have a lot of growth in the new year.
You'll get it. You'll get it for sure. I'm excited to see where you're at. You've been working hard, and I know it'll continue. So I love it. I love it. And that's with the whole stopping thing. That's practice too. It's none of us here on this call are born we're not born with a trait that says that we're really good at stopping it with trades, right? That's something that just takes practice and time and realization. There's no one's born better at it than others. It's just straight raw practice, repetition. And the more times you stop, the easier it gets over time, for sure.
All right, John, go ahead.
Hey, I'm very thankful to be part of this community. I found you guys through, one of the tweets. I used to follow Carlson and Henry, you too, as one of the top ICT tweets that came, and it has been life changing for me. I've been trying to trade futures since 2020. First 3 years till end of 2022, I didn't have even a single PA funded, and then around mid of 2022 is when I found ICT. I went all in. That's how I found you guys, and joined this whole community. And last year has been a blessing. I've got several funded accounts. No payouts yet. I'm still working through my drawdowns, and I've reduced my size. But I have several funded. I have not blown a single funded, so my risk management is at point.
Excellent.
And I've reduced my size to a place where I'm very comfortable taking my setups. I've learned a lot during this journey. A couple of my PAs have come down to break even, so I'm hoping to continue down that path, and as I go beyond maybe 52K, uh, go to 2 micros instead of one, and then start getting some payouts in spring or later this year. So very happy to be part of this community. I'm very glad I found you guys out earlier, in the year last year, and then have been attending all the calls here. And I'm very glad that you guys share so much insights, and answer all the questions that we have. Yeah,
Appreciate it.
thanks.
Good
Way
to
to go,
hear that
man.
you haven't blown one yet. That's
Yeah.
a big that's a big win in my category for sure, right? It won't be a forever thing, but I definitely think that you're killing it with regards to risk management, because it's very easy, right? Those prop firms are made for them to be blown, right? Because that's how that prop firm makes money. So to see that you're combating that system, and you're figuring out that it doesn't have to all change tonight and tomorrow, and that it can take time, and you can slowly work your way out of that drawdown is a really good realization to have. So
Yeah.
kudos.
Well done.
Thanks, guys.
Let's see. Anyone else want to come on and share some reflections from the year? Kate and Sarah, I don't know who went first, but someone can come on. Start. Go ahead, Kate. Start, Kate.
All right. Hi. I want to say that I'm, first of all, really glad that I joined Firsthand Trading. This was probably one of the best decisions I've made all year. Just to be around people, genuine people who want to get better. So I really want to thank you guys for that. And in terms of something personal, technically, I'm actually just really proud of how far I've come. I was looking at my notes from January or February, and back then I didn't even know what a consequent encroachment was. So, I mean, for me, that's just huge to see my own journey, and also, to see that that's possible. So, yeah, going into next year, I want to build more consistency and work on my trade selection and continue to contribute to this group, which I really, really appreciate. So thank you, everyone.
Hey, you right now are one of the poster childs and living witness and walking testimony of what hard work and listening to yourself and figuring out, not being shy, asking questions, doing the right things at the right times, over time, it slowly starts to get better. If I can remember when we first started doing the training exercises, I mean, one thing that has stood out to me the most is your ability relatively quickly to, your first couple trades, they were like, you were in and you were out in a couple points. You were
Like 2
in
points.
and you were, yeah, you were getting like 5 points on NASDAQ. And the way your markups were, the way your entries were, I knew, still do, that I was like, she can get so much more out of these trades if she just practices on holding and being a little bit more patient and letting the trade just manifest itself out and letting it breathe. And you worked on it. We had talked about it, and I said that was one things that I wanted to see you work on. And over time, I mean, it wasn't even a couple months, it was a couple weeks before that 5 points became 15 points, and then that 15 points came 20 points, and you're slowly holding it. And it's as you start to hold and as you're figuring it out, you're going to figure out your sweet spot, right? It's not that you have to continue to get bigger and bigger and bigger trades. It's just opening yourself up to figuring out what your sweet spot is. And so I applaud you, and I am very proud of you. And I thank you for how active you are in the community and how you help others, right? I not only do I see your input just on trading in general, but your input on others and your ability to help others and your want and need to help others and answer questions and respond to other training assignments. I give you your flowers on that, because you've done so well, and I can't wait to see where you go over the next year.
Thank you. Just taking you guys as my example. So trying to help as much as I can.
Thanks so much, Kate. Sarah, you want to come?
Yeah, can you hear me?
Yeah.
Yes.
Okay. I think reflecting over the past year, the two things that I am most grateful for are kind of finding a general direction with my trading and this community. I only started any kind of trading at all in March. I didn't really think it was for me. I didn't know anything about markets or math or any of that. And I kind of bounced around from different things. You see different ads in different places, and I almost gave up several times. And then recently in November, I found futures and kind of tried figuring those out a little bit. But it wasn't until I saw Carson on the Top Step TV and the way he was talking about not just markets as like a thing you do for work, but actually as like a way to work on yourself and to really understand yourself, and how trading, reflects a lot of these really great lessons. It was like the light bulbs went off for me. It's like, okay, I'm looking at trading wrong, or I could be looking at it in a more useful way. So when I kind of let go of, okay, I need to, trade as the thing that I do to, provide for my family or whatever, and started looking at it as more, a lifestyle and a working on myself and kind of changing my perspective, that helped a lot, and listening to ICT's videos and just kind of like seeing that there are tools for different things. Like when you see this, when the market is doing, consolidation, or when the market is doing retracement, or, the other two steps, like there are tools. And so that really helped me with the discouragement, I guess, I have been battling. And I think that's probably the personal reflection for me is just, I'm a single mom. I've got 2 little bitty kids. I don't have any other childcare. They're always running around being crazy. So just realizing that I could find a model that I could do during their nap time. Hello, silver bullet, kind of like what Leslie was talking about. And just kind of like learning about that one thing kind of reduce the overwhelm. So that's the direction that I'm really grateful for this last year. And then the community has helped. Gosh, I don't want to get emotional, but every single person has been just outstanding. Everybody is sharing. Axel's put up some amazing notes. When I've asked people questions, I've gone through comments, and just everybody is just so generous with their information. And there's just a genuine compassion for one another that I didn't think would exist in trading. I thought trading was this cutthroat thing where everybody was, out for themselves, and I have not experienced that here. So I am just grateful. It seems like a pale word to describe how I'm feeling, because I felt kind of isolated. I felt kind of alone trying to figure this out on my own, but I don't feel that way anymore. I know that there are people that are, on all stages of the journey. There are people that are new like me here. There's people in the middle. There's people that have, really kind of reached where they want to reach and are reaching for even more. And it just feels amazing to be part of a family, I guess you could say. It feels more like family. And so I'm super, super grateful for that. The next year, I'm really working on my own personality and trying to combat some discouragement when I feel it. also finding balance between trading and, you know, my kids and homeschooling and all that, and letting go of the idea that the more that I trade or the more effort, I got to get in here, I got to force something, like letting go of that and realizing that sometimes good effort is not doing anything because I'm not wired that way. I think that's really the big thing that is going to help me out in 2024. So I am super grateful for all of you, every single person. I just really am excited about what 2024 is going to bring for everyone. So thank you.
Thank you. Thank you. I'm glad you found us. It's
a really heartwarming
good.
share.
Yeah, that
Thank
was
you
good.
so much.
I've said it too. Like this is trading and this is community, and we're all here to accomplish the same things. But it's supposed to feel like family. That's me and Henry when we were sitting here in the middle half of the year trying to figure all this out. It was, how do we build something with the forefront of it is obviously success, but finding success through a family-oriented community where you don't have to hide any form of yourself, right? You shouldn't have to put on a mask to try to be someone who you aren't. And you can find people in here that truly just want to see you succeed. And if they have the value for whatever you're seeking, they're openly willing to give it. And, me and Henry, we're fortunate enough that the universe, at least gave us the correct individuals, right? It's not just myself. It's not just Henry. Like you said, it's we are not what makes firsthand, right? We might have built it, but we are not what makes it what it is. It is the people inside of it. It is the people that actually utilize it for what it is. And that was really sweet of you to say. I do appreciate it. And it will only get better, I promise. Cool. Anyone else?
I see a comment from Louise. He said, I want to thank you guys for everything and listen to you guys while I'm working, driving a semi truck. LOL, but very glad and grateful I found this group. Thanks, Louise.
you.
That's commitment. It's commitment.
Yeah, you're always on the calls too.
Yeah, it's great to see you every week. And I hope your trading's going well. I look forward to hearing more from you in the future as well.
Well, that's
Does anyone else want to come on? You don't have to feel forced to if you don't want to, but see a couple other folks.
We'll make a post in the thing too, so for people to type out, because like we said, it's New Year's Eve. A lot of people are probably traveling right now. We kind of expected a smaller audience on the call, so we'll leave that in the forum for people to go and post if they feel the need to. But other than that, I mean, that's it for me. It's going to be a very exciting year. It's going to be challenging. It's supposed to be challenging. It's not going to be comfortable. It's not supposed to be comfortable. But I can't wait to, in exactly 1 year, I want to go back and watch this call. And then I want to see what the call next year is on a year from today, right? That's the whole goal. And really every day when I wake up, whether it's rainy, sick, cold, whatever, right? When I wake up, it doesn't matter how I feel. I'm doing it because I want to see what that difference is going into next year. I will leave you guys with this too. I've got something else to read. I'm going to give you guys 7 rules to follow going into the new year. If you want to write them down, great. If you want to reach out to me after and ask what they were, I can send them to you also. These are 7 rules to follow going into the new year, right? Number 1, feeling sad after making a decision doesn't mean it was the wrong decision. Number 2, life is not tiring. Wanting life to be a certain way, but not having the confidence to make it that way is tiring. Number 3, self-awareness is realizing that there's no opponent. It is you versus time. Number 4, sometimes saying goodbye does not mean you don't love something. It just means you love yourself more. Number 5, that lesson will always repeat itself until you learn it. Number 6, if you keep one hand on your past and one hand on your future, you'll never have either. To embrace tomorrow, you must let go of yesterday. And number 7, which I think is probably the most important, the world starts and ends entirely inside your mind. No matter where you end up, no matter how successful you are, you will not enjoy any of it if you get there at the expense of your mental health. So take those into the new year and really just work on being a little bit better than you were the day before, right? A lot of people try to build their future based on their pasts. You cannot do that. That puts you in a weird circle that you don't get anywhere, right? If you try to create your future looking into your past and using your past, you won't create a future. You're just recreating the past. So in order to create your future, use your future. Use the future to create your future, right? You don't know what's out there. You don't know what could come. So use that to create your new future. The past is the past. Like rule number 5 said, that lesson will not repeat itself, or that lesson will repeat itself until you learn it. So when you get these lessons that come in your way, know that they're going to stay there until you really learn it. Other than that, I'm all good. I think I've said everything, and I'm super excited. I hope you guys have a great New Year's Eve. I hope you are safe. I hope you're healthy. I will pray for everyone on this call and everyone in the community that they have a very safe, happy, healthy new year. And really the only thing left to say is let's get to work.
Let's do it. All right. Oh, well, as always, this call's been recorded. If you want to go back and watch it, it'll be uploaded this afternoon on our YouTube channel. If you would, go there and leave a comment if you like. If you got friends who are interested in trading and you want to join our family here in the new year, share a video with them, bring them on. And we're super excited. Look forward to the growth in the new year. I know everyone's going to have an amazing year in their own way, right? Growth comes differently for everyone, but every stage of your journey is important, and it's a step on the way to where you want to be. So thank you so much for being here. Thanks for sharing your stories today. And we will see you on Wednesday.
On Wednesday. Be great. Have fun. Enjoy your new year. Peace.
Take care, y'all.